Bitcoin surges past $120,000. Is this the new digital gold? Bitcoin just smashed through the six-digit mark, over $120,000 per coin. Is this the beginning of a new financial era? Could Bitcoin be replacing gold as the ultimate store of value? Let's break down what's driving this explosive growth, who's buying, and what it means for your financial future. Why is Bitcoin going up 2024-25? Spot ETFs approved. Institutional investors now have easy access to Bitcoin via regulated and insured ETFs. Central bank instability. Rising inflation and interest rate uncertainty push investors toward hard money. Geopolitical tensions. Wars, sanctions, and trade wars have shaken trust in traditional finance. Fiat currency collapse. In countries like Argentina, Turkey, Nigeria, and Lebanon, hyperinflation is destroying savings. Cleaner mining. Bitcoin mining is going green, powered by renewables and stranded energy. 2024. Halving. April 2024 halved Bitcoin's block reward, historically followed by bull runs. Brief history of Bitcoin, 2020 to 2025. 2020-2021. Institutional awakening. COVID-19 triggered money printing and fear of fiat devaluation. Bitcoin surged past 60K, and companies like Tesla, Square, and MicroStrategy bought billions. El Salvador made Bitcoin legal tender. The governments began scrutinizing crypto's energy use and role in ransomware. 2022-2023. Crash and regulation. FTX collapse shook the market. US SEC and CFTC launched investigations. Europe passed MiCA, first comprehensive crypto law. And China banned mining but pushed digital yuan. BRICS explored blockchain-based trade. 2024-2025, the political chessboard. US and EU approved Bitcoin ETFs. CBDCs launched across Europe, India, and China. Bitcoin debates intensified. Freedom versus surveillance, privacy versus regulation. Some nations see Bitcoin as a hedge against the dollar. Who's buying Bitcoin? And why institutional investors? Who? Hedge funds, asset managers, pensions. Why? Digital gold, diversification, ETF access. Sovereign entities. Who? El Salvador, BRICS, Argentina, Nigeria, Turkey. Why? Hedge against dollar. Avoid capital controls. Retail and millennials. Who? Gen Z, millennials, influencers. Why? Decentralization belief. FOMO. Distrust in banks. Corporations. Who? MicroStrategy, Tesla, Block Inc. Why? Hedge cash depreciation, long-term upside, crypto whales and Web3 communities. Who? Early adopters, Bitcoin maximalists. Why? Self-custody, belief in sound money. Risks to watch. High volatility, huge price swings are still common. Regulatory crackdowns, unpredictable government responses. Speculative bubbles, market hype can overheat fast. A smart move, always invest only what you can afford to lose. Smart strategy, dollar cost averaging, DCA. Dollar cost averaging, DCA, means investing a fixed amount of money at regular intervals, no matter the market price. Example, you want to invest $1,000 in Bitcoin. Instead of investing all at once, you invest $100 per week for 10 weeks. Sometimes you buy high, sometimes low, but you average out your cost. Benefits. Reduces emotional panic, buying, selling. Minimizes timing risks. Builds consistent investing habits. When to use DCA. When investing in volatile assets like Bitcoin. When on a monthly budget. When avoiding lump sum risks. Vision of the future. Bitcoin is becoming more than a currency. It's a global savings vehicle, a political statement, and a firewall against inflation and centralized control. Whether you're a believer or a skeptic, one thing is clear. Bitcoin is no longer just a fringe asset. It's becoming the backbone of a new digital economy. If you like this content, like and subscribe the channel. Click on your left to watch the next video. When Reddit pilots a 10x stock, the meme stock comeback. Explained. My name is Felix, and see you on the next one.